Hello, and welcome to another episode of AltFinance, the funding frontier. I'm your host, Jason Feimster, founder and CEO of Moonshine Capital. Today, we're diving into a topic that's revolutionizing the way people work and earn in our rapidly evolving economy. We're talking about instant cash flow, how microfunding transforms the gig economy. In recent years, we've witnessed a seismic shift in the workforce landscape. The rise of the gig economy has not just altered the way we think about our jobs and careers, it has redefined them. From ride sharing drivers to freelance graphic designers, from part time consultants to digital platform workers, the fabric of our labor market is more diverse and dynamic than ever before. But with great change comes great challenges, especially when it comes to financial stability and growth. That's where microfunding enters the picture, a beacon of hope and opportunity for many in this new gig world. Microfunding, with its quick, accessible, and often life changing financial support, is not just a tool, it's a game changer for countless individuals striving to make a mark in the gig economy. In today's episode, we will unpack what microfunding is all about, its pivotal role in the gig economy, and how it's helping individuals and small businesses alike to not just survive, but thrive. We'll explore real life success stories, dig into the best practices for navigating this financing option, and even take a glimpse into the future of the symbiotic relationship between microfunding and gig work. Whether you're a gig worker yourself, a small business owner, an entrepreneur, or just someone fascinated by the changing tides of finance and work, this episode is packed with insights, stories, and practical advice that you won't want to miss. So settle in, grab your notepad, and let's embark on this journey to understand and harness the power of microfunding in the gig economy. It's time to redefine what financial success and business growth look like in today's world. Let's start by defining what we mean by the gig economy. At its core, the gig economy is a labor market characterized by the prevalence of short term contracts or freelance work, as opposed to permanent jobs. It's a free market system where temporary positions are common and organizations contract with independent workers for short term engagements. But this isn't just a niche corner of the labor market, it's vast and growing rapidly. According to a report from MasterCard, the gig economy was projected to grow by a staggering 17% to reach 455 billion in 2023. This explosive growth is a testament to how integral gig work has become in our daily lives. Why has the gig economy ballooned in recent years? Well, there are several factors at play. The rise of digital platforms that connect freelancers with gigs, the increasing desire for flexible work arrangements, and, not least, economic necessity. The COVID 19 pandemic also played a significant role, accelerating the shift towards freelance and contract work as people sought new ways to earn in uncertain times. The financial impact of the shift is significant. For many, gig work isn't just a side hustle, it's their primary source of income. A study by Upwork in 2021 found that 36% of the U.S. workforce freelanced in some capacity, contributing nearly 1.3 trillion to the economy. These numbers aren't just statistics, they represent millions of lives and livelihoods. But it's not all sunshine and rainbows in the gig world. This kind of work comes with its own set of challenges, especially in terms of financial stability and access to traditional financial services. Without the safety net of a regular paycheck, gig workers often face uncertainty about their income streams, making it harder to plan, save, and invest in their futures. This is where microfunding comes into play, bridging the gap between the unpredictable nature of gig work and the need for financial stability. Next, we'll explore the ins and outs of microfunding and its critical role in the gig economy. So, what exactly is microfunding? In simple terms, microfunding refers to the small loans or financial injections that are typically aimed at individuals or small businesses who may not have access to traditional banking services or loans. These are not your typical six-figure business loans. Instead, they're smaller, more accessible, often ranging from as little as a few $100s to several thousand. The beauty of microfunding lies in its accessibility. Traditional banks often shy away from small loans due to the high cost to revenue ratio. Microfunding institutions, which include not for profit organizations, specialized microfinance institutions, and even certain forward thinking banks, fill this gap. They offer financial products designed specifically for those who need small, quick injections of capital. One of the key players in this field is Kiva, a pioneer in microlending. Kiva's platform allows individuals to lend as little as $25 to help create opportunities around the world, including for gig workers and small businesses in various sectors. As of 2023, Kiva has a network of 1.6 million lenders and has distributed over 1.6 billion in loans across 77 countries. These numbers are a powerful testament to the impact of microfunding. Another aspect of microfunding that makes it so vital for the gig economy is its flexibility. Unlike traditional loans, microloans often have a more lenient repayment structures and requirements, making them more adaptable to the fluctuating income of gig workers. This flexibility can be a lifesaver for those who have irregular income streams but still need capital to invest in their businesses or cover unexpected expenses. Microfunding isn't just about the financial aspect, it's also about empowerment. By providing access to capital, these loans empower individuals and small businesses to take control of their financial futures. They enable people to invest in equipment, marketing, or even personal development, investments that can lead to increased income and financial stability. As we see the gig economy continue to grow, the role of microfunding in supporting this sector becomes increasingly vital. It's a relationship that not only benefits individual workers and entrepreneurs, but also contributes to the broader economy by fostering growth, innovation, and financial inclusion. Next, we'll take a look at how microfunding and the gig economy are intertwined and explore some real world examples of this dynamic in action. Microfunding and the gig economy are more than just parallel developments in the modern financial and labor landscapes. They are deeply interconnected. This synergy is based on a fundamental alignment of needs and solutions. The gig economy, with its flexible but often unpredictable income, creates a demand for financial services that are equally adaptable. This is where microfunding shines, providing quick, accessible, and flexible financial support that traditional banking systems often fail to offer. Let's take a real world example to understand this better. Consider the case of Linda, a freelance graphic designer based in Atlanta. Linda's income is project based, which means some months are lucrative while others are lean. To upgrade her equipment and software for a big project, Linda needed a quick infusion of capital. A traditional bank wasn't feasible due to the time consuming approval process and her variable income history. However, through a microfunding platform, Linda was able to secure a small loan quickly, which she successfully repaid over the next few months from her project earnings. This is just one of the countless stories where microfunding has played a crucial role in empowering gig workers. The role of technology in this synergy cannot be overstated. Digital platforms and fintech innovations have made it easier than ever for gig workers to access microfunding. Apps and online services streamline the application and approval process, reducing the time and bureaucracy that often hinder traditional loan processes. This technological ease aligns perfectly with the tech savvy nature of many gig workers, making microfunding a go to solution for their financial needs. Another critical aspect is the tailored nature of microloans for gig workers. These loans often come with flexible repayment options that consider the fluctuating income patterns typical in gig work. For instance, some microloans offer repayment terms that adjust monthly based on the borrower's earnings, a feature particularly beneficial for gig workers whose income can vary significantly from month to month. However, it's not just about individual benefits. The ripple effect of microfunding in the gig economy is vast. By providing financial stability to gig workers, these loans help sustain and grow the gig economy itself. They enable workers to invest in their businesses, expand their services, and ultimately contribute more significantly to the economy. In essence, microfunding acts as a catalyst for growth and sustainability within the gig economy. But like any financial tool, microfunding comes with its own set of challenges and considerations. In our next section, we'll explore and look at some success stories of individuals and businesses that have thrived thanks to microfunding. Our first story takes us to Chicago, where we meet Maria, a talented caterer specializing in gourmet vegan food. Maria started her catering business as a side gig, operating from her home kitchen. As demand for her unique culinary creations grew, so did her need for better equipment and a commercial kitchen space. Traditional bank loans were out of reach due to her limited credit history and the small scale of her business. But through a local microfinance institution, Maria secured a microloan that enabled her to rent a commercial kitchen and buy essential equipment. Fast forward 2 years, and Maria's business has not only thrived, but also expanded, catering to a larger market and even employing a small team. Maria's success story is a testament to how microfunding can ignite the potential of gig economy entrepreneurs. Another remarkable story comes from San Francisco, where we meet Alex, a freelance software developer. Alex had a vision to create an app that would help gig workers track and manage their finances. However, turning this vision into reality required funds that Alex didn't have. Through a microfunding platform geared towards tech entrepreneurs, Alex was able to secure a loan to develop his app. Today, that app is used by thousands of gig workers across the country, helping them navigate the financial complexities of gig work. Alex's journey highlights not just the personal success that microfunding can bring, but also its potential to create solutions that benefit the wider gig economy community. These stories exemplify the profound impact that microfunding can have. It's not just about the financial aspect, it's about empowerment, innovation, and creating opportunities that otherwise might not exist. Microfunding is more than a financial tool, it's a catalyst for growth, a means to turn ideas into reality, a way to uplift and transform lives in the gig economy. As we see from Mariah and Alex's stories, microfunding can be a vital lifeline, providing the necessary resources to grow a business, pursue a passion, or solve a problem. It's a reminder that often all it takes is a little financial support to unlock incredible potential. Now, if you're thinking about how you can access microfunding or best practices to navigate it, stay with us. Next, we'll dive into how to access microfunding, tips for managing these loans, and how to avoid potential pitfalls. After hearing about the remarkable impact of microfunding on the gig economy, you might be wondering, how can I access microfunding and what are the best practices for managing it? Let's dive into that. Accessing microfunding has become more straightforward than ever, thanks to the plethora of platforms and institutions specializing in small scale loans. The first step is to identify the right microfunding source for your needs. This could be a microfinance institution, a peer to peer lending platform, or a community based program. Websites like Kiva and Prosper offer a user friendly way to apply for microloans, often with minimal paperwork and quick turnaround times. While applying for microfunding, it's crucial to have a clear plan for how you'll use the funds, whether it's for purchasing equipment, marketing your services, or covering operational costs. Having a well defined purpose will not only strengthen your application, but also help you focus the funds effectively once you receive them. Now, managing a microloan responsibly is key to ensuring it becomes a tool for growth rather than a financial burden. Here are some best practices. First, understand the terms of the loan thoroughly. This includes the interest rate, repayment schedule, and any fees or penalties. Next, integrate the loan repayment into your budget. For gig workers whose income can fluctuate, this might mean setting aside a percentage of each gig's earning to ensure you can meet the repayment obligations. It's also wise to keep your loan funds separate from your personal finances. This can help you track how you're using the loan and ensure it's going towards its intended purpose. One crucial aspect to be mindful of is over-leveraging. While it might be tempting to take on multiple microloans, especially if you have several projects or needs, be cautious. Over-borrowing can lead to a debt trap where your income goes more towards repaying loans than towards growing your business or savings. Lastly, it's important to build a positive borrowing history. Timely repayments and responsible borrowing can open doors for future financial needs and opportunities, enhancing your credibility as a borrower. Remember, microfunding is a powerful tool, but like all tools, it must be used wisely and responsibly. In our next segment, we'll explore the future of microfunding in the gig economy, looking at emerging trends and potential changes in the landscape. The future of microfunding in the gig economy looks both bright and dynamic. As the gig economy continues to expand, the demand for flexible, accessible financial solutions will only grow. Microfunding is poised to meet this demand, evolving alongside the needs of gig workers and small businesses. One of the key trends we're seeing is the increasing integration of technology in microfunding. Fintech innovations are making it easier for borrowers to access funds, manage their loans, and even receive personalized financial advice. We can expect to see more platforms that leverage AI and machine learning to provide tailored loan offerings, assess risk more accurately, and enhance the overall user experience. Another emerging trend is the focus on sustainability and social impact in microfunding. More and more, lenders are not just looking at the financial return, but also at the social and environmental impact of their investments. This can mean more opportunities for gig workers and entrepreneurs who are involved in green initiatives, social enterprises, and community focused projects. Regulation will also play a significant role in shaping the future of microfunding. As the market grows, governments and financial authorities may introduce new regulations to protect borrowers and ensure fair lending practices. This could lead to greater transparency and stability in the microfunding sector, benefiting both borrowers and lenders. However, challenges do remain. The gig economy and microfunding sectors must navigate economic uncertainties, such as fluctuating interest rates and market instabilities. There's also the ongoing need to balance accessibility with responsible lending to prevent over indebtedness among gig workers. In conclusion, the relationship between microfunding and the gig economy is one of mutual growth and opportunity. As we move forward, this synergy has the potential to not only provide financial solutions, but also drive innovation, promote stability, and foster a more inclusive financial ecosystem. And there you have it, folks. The end of another insightful episode of the AltFinance, the funding frontier. Today, we've traversed the dynamic landscape of the gig economy and the crucial role of microfunding within it. From understanding the basics of microloans to hearing inspiring success stories and exploring best practices for managing these funds, we've covered a lot of ground. As we sign off, I'd like to leave you with a few key takeaways from today's episode. First, the gig economy is not just a fleeting trend. It's a significant part of our current and future labor market, reshaping how we view work and income. Second, microfunding is a vital lifeline for many in the gig economy, providing the flexibility and accessibility that traditional banking often lacks. Third, the synergy between microfunding and the gig economy is potent, driving not just individual success stories, but also broader economic growth and innovation. Fourth, technology and a focus on social impact are key drivers shaping the future of microfunding. And finally, while microfunding opens up numerous opportunities, it's essential to approach it with a plan and manage it responsibly. I hope this episode has been as enlightening for you as it has been for me. If you're in the gig economy and looking into microfunding, remember, you're not just navigating a financial path, you're part of a broader movement reshaping our economic landscape. Before I go, a huge thank you to our listeners for tuning in and to our sponsors for their support. Your engagement and feedback make this journey worthwhile. For more insights and conversations on alternative financing, don't forget to subscribe to our podcast, visit our website, and follow us on social media. We've got plenty more topics to cover, and we can't wait to have you with us on the next episode. This is Jason Feimster, your guide through the world of alternative finance, signing off. Stay curious, stay informed, and keep pushing the boundaries. Until next time, take care and keep thriving.